What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 29th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to answer a very important question that many people have in their minds at the moment. If you've been watching the past couple of videos here on the channel, we've been continuing to propose something we've been talking about for a long time, a very contrarian viewpoint, that we're not going to be seeing Bitcoin's cycle highs until Q4 of 2022. That's right, not 2021, an entire year from now from where we are here at the moment if we're using the expanding cycle theory. But not only that we're still going to be reaching optimistic levels at $200,000. That's our target range for this cycle. But a really important question we need to ask ourselves here is when we can expect the next mid-cycle rally. As many of you might know, we believe that we're going to see another major rally here sometime in the near future, and therefore another May-styled correction dragging down prices afterwards, setting up the foundation for prices to drive up even higher, all the way up to 200K late into 2022. So let's go ahead and see if we can not only use price action and understanding the current state of the market cycle, but also data science models to give us a little bit of a boost here. So as you all know, over the past couple of weeks, Bitcoin, since it set in its new all-time highs around $69,000 even on most exchanges, we've been seeing a pullback in price down towards $56,000, $57,000 at the current moment. Now, all the while, people have started to turn bearish. They've started to say, oh my gosh, this is a double top. I want to make it very clear to you guys that this is likely not a double top here in price. What I think we're seeing is something we've chatted about many times. We've been theorizing since back here in November that we're going to have to turn this range of previous resistance into new support. And that's going to mean we're going to have some chop in price, setting up the foundation for price to eventually start to break out higher afterwards. But we're going to need some sideways consolidation here, in my personal opinion, at least looking at the charts here. This was a very, very significant range of resistance. We had a multi-month a distribution range, accumulation range down here, and I think we could very well be seeing another range of consolidation here until we make this range support and move higher. But many of you might be asking, when does that breakout happen? Well, we already generally know from price action that we can get some kind of analysis here that probably in the next coming months, similar to how we had a multi-month consolidation here, maybe sometime in Q1 or Q2, we could get a breakout, especially if we're estimating that Q4 is going to be when the peak comes in at 200K. But I want to go ahead and utilize two key things here that can start to give us a framework to work with. Right now, I know a lot of people are still saying, Nick, you're crazy for believing in the expanding cycles. Well, the 4-year cycle method is not only about to go bust in about a month if Bitcoin doesn't set in its cycle highs at 100K or wherever price target you might be thinking about, but outside of that as well, we've talked about the flaws here of the 4-year cycle, at least from my opinion and my perspective, right? You got to take it with a grain of salt. You can believe in whatever you want, follow the models you want. I generally know that, as we can see here historically from bottom to top, how we like to analyze markets, they get longer over time and they have decaying returns. And that's how a lot of market cycles work in other asset classes. It gets more difficult to increase things over time, right? But diving back into the chart here, right, we can see here that according to the momentum we have here onward towards 200K, price has been actually kind of going around this metric for some time. And it looks like, especially as we had the correction back in May, we are revisiting back to the highs here, generally speaking, that we could be in for a pop out soon in the near future above the line here. Now, let's go ahead and see if we can utilize data science models to figure out when that could be. There's really one simple one, and it's not so much data science model here, but an interesting way to start viewing price action and utilizing an oscillator, right? So this is an oscillator data science model here, and it's taking the logarithmic growth curves, the overall logarithmic expansion of resistance and support, the midline here for Bitcoin over time, utilizing various Fibonacci levels, right? So we have the low deviation and the high deviation, the yellow lines on either end here of the cycles, right? And it generally means that when we come up here in the oscillator, hitting towards that high deviation or close to it, that is generally where we're gonna have cycle peaks. And when we come here to the lows here, that's when we have the lows. Now, stick with me here for a moment, because this is a really interesting way you can utilize data science models to not only compare this cycle to previous ones, but also think about how it might differ from the previous ones, right? So if we're on the idea of expanding cycles, right, we know that this cycle is generally going to take longer from peak capitulation, the bottom or the lows of the market, to the new all-time euphoric highs. we can start to look for not only similar cycles to pull some inspiration from, where have we seen similarities, but also how is it going to differ this time around, considering that the cycle will expand? Well, I think everyone by now has been talking heavily about 2013. We've been kind of championing this idea for a long time. It's very similar to the 2013 cycle. We had a blow-off rally across the midline here, and it basically consolidated against it for multiple months, thereby having a final blow-off rally later on within the cycle. Well, I want to go ahead, zoom out here, reset our axes, and take a look here at the current cycle we're in, right? Lots of similarities here, right? Unlike the 2017 cycle, we came up to this midline very early on in the cycle and have been generally chopping around it for some time. And many people think that just like 2013, we're about to just break out. The price is about to just climb up like crazy. And look, I'm not going to sit here and doubt that that can happen in crypto, but I think we can see now with the kind of price action that's been playing out versus people's estimations for November and December that this will take a little bit more time than people are expecting. Now, how can we utilize expanding cycles in combination? Let's go ahead and dive into it. So if we take a look back here in 2013, we see here that actually right at the start of April is when we tapped the midline here, around right under $100, right? So we can see here from the 1st of April all the way here until the end of October, right? That's when we actually kind of escaped the line here and kicked off the cycle, really the beginning of November, right? So let's count up those months. Heading back here at the beginning, right? April, we're going into May, June, July, August, September, October, November. 7 months gap between the time we met this midline and consolidated along it to then eventually have the breakout. So 7-month consolidation period, right? Some people make it seem like it was such a short period of time, but 7 months, it's a good range of time from when we reached that midline. Let's go ahead and just take an observation, a look here at what's been going on here since we reached the midline. So we first reached it back here in January 2021. I would go ahead and look, you guys might see it as a bit biased here, but I'm going to go ahead and just rough it off at January, right? Because it was the 5th day of January, early part of the month here, right? Where we kicked up and hit this midline. So let's go ahead and count all the way to where we are right now, right? So we're here in January. So we're going to go February, March, April, May, June, July, August, September, October, November, right? So we're coming up here and closing out November, almost 10 months of consolidation, right? So we've already gone through a little bit longer than 2013. See how the expanding cycles are starting to play in here. Even though we're similar to 2013, we've already had 10 months of general consolidation in price versus 7 months like we saw back in 2013. The cycles take longer to fuel up these next bigger rallies in the market, and at the same time, they're not going to be the same returns as last time. An important other element to understand. Now, that being said, some of you might be saying, Nick, are we expected to explode right now? Are we ready to go up in price? And I would say, no, not just yet. Because what I think is reasonable here, right, if we've gone from 7 months already to 10 months here, I think what we're going to see, very, very likely, is that with each cycle, right, we're generally expanding by a year to some degree. Okay, so this was back not in the previous cycle, but in the cycle beforehand. Not the 2016 one, but the 2016-2017 one. This was the 2013 rally. So I think, generally speaking, we're adding in a 2-year additional time frame from bottom to top in that cycle, which was the second one for Bitcoin. So if we are to follow expanding cycles, right, and we're thinking about this kind of segment of the overall rally, we'd probably be adding a total of 6 months from the previous one. Well, where does that put us, right? We had 7 in the original, we add 6, that's going to be a total of 13 months. We've already gone through 10 months. So if we had December, January, and February, perhaps, of course, history's not always going to line up exactly. It doesn't always repeat, but it definitely rhymes. Perhaps sometime in February of 2022, we could start to see the exit out of this sideways accumulation period and really start to see a breakout towards 100K. And maybe, I'll even go ahead and say this, it might be that we see the expanding cycles theory broken to some degree and we go all the way to 200K, right? But that is the really optimistic narrative here. In this case, the idea that we'd be able to get up as high as 200K. I think what's much more likely is that sometime maybe in late January, February, right? We start to get that breakout after going sideways for some time, chopping in between these Fibonacci levels, and then what we get is a breakout towards the next Fibonacci deviation. Very similar to how we almost got it up here, back here in April, right? That level has expanded and will probably service as resistance to some degree, or some range around there, right? And again, if we go back here to the expanding cycles, or just take a look at the long-term price action for Bitcoin, right? What that's generally asking for here, and I'll just go ahead and use the percentage, the date and range tool here, right? For the point of where we're at now, this is calling for in February to kick off that rally, and probably sometime in March to top out around 100K, right? 100%, or sorry, 78% price move from where we stand at the moment over 3 trading months. Doesn't seem like a crazy ask to me. Seems like a quite conservative estimation according to the data science that we have, the expanding cycles, and how we know crypto can move. Crypto can easily make a 70-80% move within this time frame. And that's factoring in a lot of accumulation, right? A lot of sideways movement in price, right? Now, it won't be exactly accurate here as we jump here to the daily chart, right? So we don't want to actually go off this. We got to drag it over, right? And we're estimating here again sometime February, March, right? Generally speaking, a little over 90 days, 87% with the price action. Drag it down a little bit. Actually, that's sorry. When you go from the monthly to the daily, it sometimes will mess up your chart. So 75% move over 93 trading days. Easy. Very easily done. Now, I understand that this narrative is not as exciting as December, $100,000 for Bitcoin's price. And it certainly isn't as exciting as the other projections of $98,000 by November that some people were championing. But to be honest with you guys, the cycle is not only a later cycle than the previous ones, so it's going to take more time. But outside of that as well, it's just how the market works. Cycles change to some degree, and this cycle has been showcasing to us that it's highly driven by leverage, and we have these major volatile swings after periods of sideways consolidation. If you kind of take the COVID element out of the equation here, where again all market prices were dumping for all asset classes, we can see here with this cycle we've generally had 2 major periods of sideways accumulation, right? And even again, what we're asking for here is probably shorter if you're to do the time frame analysis, right? Generally, where price is pushing sideways, right? And then we have major breakouts that outpace the speed of previous Bitcoin markets, which is crazy, right? So the idea here would be after we set up the foundation here, consolidate sideways, we start to really set up the foundation. I'll actually shrink it here a little bit, right? Where we start to come up above that line. And as we go on the logarithmic element here, we start to come back down, probably have another correction, and set up the foundation here for a major blow off top, right? And these consolidation periods, again, are going to get shorter. Don't let my circles confuse you, right? We're expecting that probably this is going to be in January, February, right? We have that breakout. It's getting a bit shorter. The momentum's picking up here. People are taking on more risk. They think that the party's never going to end, but it eventually does. Right? So that's the long-term analysis here. And I want to go ahead and I do want to spend some time here to talk a little bit about the broader cycle as well, outside of just Bitcoin, because I think that's important as well. But I want to share with you guys, because I get a lot of people ask me this, like, okay, Nick, you believe that we're going to have 100K, we're going to go to 200K, we're going to have another mid-cycle rally, mid-cycle correction. How do I go about trading these shorter time frames? I want to trade in between these intra-cycle rallies and sell-offs. Well, one way you guys can really get a good grip on trading and learning more about the market is you can check out today's sponsor, which is AltFins. Now, AltFins is a platform we've talked about many times here on the channel. It's a general trading tool that allows you to access tools like screeners for buying various different plays in the markets that are building technical patterns, to be able to track various different cryptocurrencies, showcasing buy or sell signals. There's all types of really interesting metrics that you can get from AltFins. But what they recently launched is their new education platform, or education webinar series, that has over 10 lessons with recent price action and examples in the market that will allow you to actually dive in to learning about all major things, the foundations of technical analysis, momentum and uptrends, trading ranges, trading chart patterns, everything you can think of or may need to know about when it comes to trading. So if you're interested in this, I highly recommend you guys check out the link down below in the description. If you're interested in learning a little bit more about what the overall course has to offer, you can check out Richard's recent video on the Altfins education series here, and generally dives into some of the basics of what they'll be talking about throughout the entire series. And if you're curious about the pricing or just how to get access to it, if you're already an annualized member on Altfins accessing the platform, it will come free to you in this case. But on the other hand, if you basically want to buy the series in this case or access to it, it's only $200, and then you get a couple of months of access towards the Altfins platform. So I recommend you guys check out the video. It's about 4 minutes. If you find that it's of interest to you, you guys can check the link down below in the description and start learning about how to not only do technical analysis in the short term, but also in the long term as well. It can be beneficial on both time frames. But I digress here. Again, you guys are welcome to check out the link down below, and I recommend even just giving Altfins as a platform a try. It's a really, really solid platform in order to get a wide range of information. Now, I want to go ahead here and dive back into this topic. We talked about Bitcoin here a good amount, but let's go ahead and take a look at some other market metrics. I want to dive into Ethereum. I want to dive into total market cap, because there's a lot that showcases we're setting up the foundation. All the while, again, a lot of people are concerned about the state of the market. Many people are worried that just because we didn't reach these optimistic time frame targets of November and December of being 100K, that the cycle's over. I genuinely don't feel that's the case, guys. In fact, what we're seeing here on price is exactly what we need to see to set up the foundation here, right? Because since back here in May, we had consistent resistance around $2.4 trillion for total market cap, right? And ever since we rallied back to $3 trillion, we've been on a pullback here, making this range support. As you all know, and I'll echo my continuous points that I always like to echo, and I almost beat it as a dead horse sometimes, generally previous resistance needs to become or should become new support in order to set the foundation for a bigger rally ahead. And this is also the same here as well for taking a look at total 2. This is altcoin market cap, right? I'll zoom in here a little bit so you can see it probably a bit clearer. Taking a look at the 3-day chart, look at this, coming right down here, making support on the previous range of resistance back in May, back here in September, setting the foundation for us to spring up higher. Now, what's been really driving this consistency here? Well, there's been a lot of players in the market who are doing good, some lagging behind, but the key thing here is Ethereum. Ethereum makes up about a little over a third of the entire crypto market cap, and it is going to direct the altcoin space dramatically. If ETH is performing well, other altcoins likely are performing well as well, right? But what we can see here is that same charting pattern. Previous resistance, right? Previous resistance, around $475 billion being turned into new support over a multitude of days and weeks here on the chart. This is exactly the kind of foundation you need to set to be able to start moving higher. And you can see here that, again, when these rallies are coming through, people are still selling them. There's fear in the market that the market's overbought, right? And it's not overbought at this point. What it's just got to do is it's got to start building this accumulation pattern, right? This foundation to be able to start having a breakout later down the line, right? So don't take, again, these drawings of the chart are just as a metaphor to showcase where generally price is going to go and what I think it needs to do here in the interim. And this just comes from my knowledge in trading throughout crypto markets, the previous markets. Things take more time than we generally expect, or at least what the crowd expects, right? My goal is to help you all become contrarians in the market, to be able to step away from the table when it's time, but also not to get fearful during the cycles, to be able to solidify our emotional outlook on the market. We're emotional human beings, right? If we don't keep those emotions in check and try to use data science and long-term analysis as much to our advantage as possible, we'll end up getting burnt in the long run. So that being said, everyone, thank you all so much for letting me ramble as per usual. If you like this video, drop a like, consider subscribing, hitting the bell icon. Check out the links down below in the description if you want to try out Altfins. And if you guys are interested in supporting the channel in other ways, we've also got the Dash report, which is going to be dropping out hopefully sometime early next week. So if you guys want to get a copy of it, it drops, feel free to sign up. Then I would wait until the month is over and stuff. So in this case, you'll get the newest copy. But that's another great way to get this kind of macro analysis moves on the market. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.